All right. Morning, everyone. Let's kick it off. All right. Last night's session, U.S. markets was slightly up, but mostly sideways again. We've kind of gotten drifted back into the sideways grind again. Without really noticing. We've got the Russell 2000 that outperformed yesterday. Obviously, small caps outperformed because of that, and we're basically looking to see, waiting for the market to kind of make a break to either side now after a little bit of sideways consolidation again. We had CPI numbers yesterday that really were the biggest impact on the market. They came in a little bit hotter. We had May numbers that came in at 0.4% versus expectations of 0.2. And I think what the significant part of it as well was year-on-year numbers were at 2.1% versus expectations of 2%. And that's actually outside of the Fed's inflation band, which is up to 2% inflation. So I think that that's important. The bond market yesterday, the U.S. Treasury market, also seemed to think it was important. We moved from about 2.58% on the yields all the way up to 2.65. So we had a nice sell-off in the Treasury market on the back of that. But wasn't able to obviously really affect the equity market too much. So we saw some housing starts that were a little bit disappointing. And then we also had things like Solar City, coming out with some news plans to build a large solar plant, but nothing exciting, nothing enough to get markets really going. The CPI number, if anything, you would have thought would have been able to get the markets to sell off, but we're in a bull market, baby, and it just keeps going. So, looking into the Asian session, no follow through on either side. We kind of a bit of mixed action there. We had the Nikkei, which was up actually, and we had some softer data on imports and exports there, but the rest of the Asian markets were down, although small. Really nothing to follow too much. Again, negative news out of the Chinese home numbers. We had some new home prices for May that dropped, and some of the property stocks came off the top there, but some of the exports and exporters in the Nikkei were better because of the weaker yen. But other than that, like I said, nothing to really take any lead from. So we're still kind of out there waiting for something to really give us a signal and the market to actually follow that signal. All right, we've got some interesting little charts here on U.S. hedge funds, and it's actually quite alarming when you see this. Here I think in South Africa we've got a lot of the funds, in my opinion, are underweight at the moment. But if you look here in the U.S. hedge funds, it's showing that they're as heavily weighted as they've ever been, with the gross holdings and net exposure as high as it's really ever been there. You can see across the board percentage of long exposure to short exposure, all of those types of things. The ratios are really, really heavily skewed to the long side, as much as we've really ever seen them. So I think that's important. It's important to know that these guys are positioned long. I do think that a lot of the mutual funds and things like that have probably been running a little bit underweight for the year, so they may be a little bit disgruntled. But the hedge funds are and the guys that play with the leverage are highly exposed. All right, we've got FedEx today in the States and corporate action, but we've got nothing here local. We had the trade balance numbers out of Japan earlier, slightly better than expected. We also have current account balance here locally at 10. We've also got CPI year on year at 10. That's inflation. That's really important. I think watching the inflation numbers is almost as important here locally as anything that we can watch. So keep an eye on that. We're expecting 6.5%. So let's see what it comes out with. If we come out with a hotter number again, you can probably expect some sort of a move in our rand, and we'll have to see how that starts to really affect our interest rate sensitive stocks. Then we've got the BOE, which releases its June minutes at 10:30. We've got construction output in the EC Eurozone. We've got mortgage apps in the States. We've got retail sales here locally. We've got a current account balance in the States, as well as the Fed QE3 pace and rate decision this afternoon in the States is obviously going to be the big thing. All right, let's have a look at the maps. Okay, first thing we'll have a look at here is we're going to go back to the good old-fashioned USD ZAR. we'll back out here quickly and look at it on a little bit longer term so that we can kind of get our significant longer term levels in here, which I think are really somewhere around somewhere here between about 1025 and 1040. It's definitely to me where the major levels are. I would say 1040 is really the major level. And then we obviously broke out of this flag pattern that we pointed out to you about 3 weeks ago. And what's interesting now is if we zoom this forward a little bit, this little consolidation that we've had here, we broke out to the top of resistance. We failed here at about 1077, probably 6 or 7 times over a period of a week and a half, and we finally popped up through that yesterday. And I really think this thing is off to the races to 11 Rand. The target on this breakout really should be about 11 Rand. Obviously, the longer term target on the longer term chart on the breakout of this flag pattern takes us to actually new lows, which would be higher than 1140. But for the time being, I think the short-term target in the Rand here we're going to push up to 11. All right, let's look at Woolies. Woolies yesterday. We're actually no, this is perfect. So we're in the 2-year now. Okay, you can see here 78 is the level that we're going to look at here. When you take that 2-day push higher where we close above 78, or 78 has really been where the level has been. So if we look at it a little bit more closely, you can see here, over the past 8, 9 months, 10 months, that 78, we've topped out there several times. We broke above that yesterday and finally got to close above that. I think if we can start to really push away from that level, we really can start to move more heavily to the upside. Obviously, there's other ways to look at this pattern. We did look at it before in terms of the breakout here, which I really think was the more proper way to look at it when we came back and we retested 72, a beautiful setup there. But bottom line is 78 is definitely important. We closed above 78 for the first time in basically a year yesterday, actually over a year, and I think that's significant. So we have to get above 80 for a new all-time closing high. We're obviously really close to that, and I think that getting above 78 is a big step in the right direction. Yesterday, the market had very little negative reaction to the David Jones approval, and I don't see any reason why technically this thing can't continue to move to the upside. All right. Naspers. One of the things I like a lot at the moment personally is Naspers. I'm long of this thing at the. I've just started to nibble on it yesterday on the close a little bit, but this thing's coming back into support here, and what I'm personally going to wait to see is this is at 1220. The support here after we've broken up above the right shoulder of the old head and shoulder pattern, and we bounced up above this flag pattern. We're kind of coming to consolidate right on top of support, which is nice. If we come down here and test 1250 and survive, I know that they've got earnings, I believe tomorrow. What's that? Okay, maybe it's next week. Sorry, it's next week. I know that we got earnings next week, but if we come down here and we test 1220 and can survive, I think that's the point where you really look to nibble and look to put your position on. I think this thing can move to new highs. It fits in with the weak Rand theory. It fits in with having obviously offshore exposure, all that kind of stuff. So watch this thing. If it can hold 1220, I think it's really bullish for Naspers. Right. The next thing we'll look at, I actually look at the spot gold price, and we'll back it up just a little bit here, and you can see what I wanted to show is just the retest of the breakdown, and you can see there very clearly we retested resistance from where we broke down, and we failed 2 sessions ago or 3 sessions ago, call it, and we really just flagged up, made a bear flag up into this level, and it's starting to look like it's rolling over now. So I can't draw a line. Okay, just take my word for it. So that's a little flag pattern here. You can see we've dropped out of support, and I think that we can take out the lows again. And if you look at that pattern, you look at this pattern here on Harmony, you can see how almost identical these setups are. it's actually quite incredible. This one obviously intraday got a little bit through resistance here, but we obviously failed it on the close and failed it spectacularly. This thing making the same sort of flag to the upside, and I think if we drop out the bottom of this, this thing will probably trade very similarly to the price of gold, as you would expect anyway. But the charts look almost identical. We dropped 30 here. I reckon this thing can definitely take out recent lows and maybe lows of the year. Obviously accelerating if the gold price can continue to fall. Right, and the last one I want to show is MMI. MMI, if we back out of this thing just a little bit here, we've popped up above, we've kind of made a bull flag down into the 26 level, and in fact, I've got another one to show you guys. Sorry, I just thought of another one now that I forgot to put down this morning. So we've just popped out the top of this bull flag, but only just so. I think we need a little bit more confirmation, but either way, this thing's lagging some of its peers. I think that, the bounce off of support here at 26 is key, and it looks like we're starting to move out the top, so this thing may have a little bit more to run. The last one that I'll actually show you will be Discovery, and you can just see here, Discovery really rallying hard after coming up testing 100, pulling all the way back into the 60s, into about 70. I think we only pulled back to about 70. We're starting to really push higher again and really breaking out the top of a flag pattern as of yesterday's close. And I think that we could make another run at 100 here. Wouldn't be surprised to see us make a run at 100. Obviously, I think once we get up to 100, we're probably about fully priced in on this move, but I don't see any reason why we can't make a move toward 100. And that's it for today, guys. Thanks a lot.